So now you got to actually technically be at $27,600 to get your first $1,000 payout, and then you drop all the way back down to $26,600, and then the next month you got to work your way up there. All right. So say another example is, say you get say you grow your account to $30,000, right? You can still only withdraw $1,000 to $2,000 for the first 3 payouts, and then after that you can pull out whatever you want, and you can only withdraw your money or withdraw your payout the last Monday of the month. So you only get to withdraw it 1 time per month. That's with Lilo. So those are the downfalls with it. The upsides with it, in my opinion, since I'm trading their money, I'm okay risking more, because if I would lose the account or blow it, I'll just pass the test again and get another account. Versus if you trade your own account, it's a shitty feeling when you blow your money and you can't go and trade it no more. And then you got to fund it with more money. Like, that's a crappy feeling. I've been there and done that before. I blew probably two or three futures accounts. I put in $1,000, $2,000 and trade ES contracts like a madman. And back in my early days when I did not have risk management, I blew the account. I'm like, dude, you gotta be kidding me. And then the next week, I put 1,000 in, grow it to 3,000. Thought I was King Kong. I would use poor risk management again. Didn't want to take a loss. I blew that account. And then I got to a point where I was like, man, I'm never trading futures again. Fast forward, what, 3 years, 4 years later, here I am trading futures and getting paid for it. So to me, it's definitely the downfalls are not as bad as the reward, as far as I know my money's protected now, sitting in dividend shares. So the profits that I get from this, I just put it right back into the share side of the market, and it's going to pay me for the rest of my life. You know what I mean? But that's how you get paid out. That's my opinion of the downfalls. But like I said, I don't make the rules. I'm just sharing with you what I experienced on my journey. This is profit over and above 25K. Absolutely, Yolanda. Yep. Did anybody else have any other questions?
At what point should we be concerned about the mirror tool?
What's up?
The tool you use to mirror account, is that something we should worry about later?
Yeah, I mean, if you're not trading futures right now, I won't even worry about it. But if you are trading futures and you trade Apex, they have the tool inside of there through the Apex accounts, and I think you pay like a one-time fee of like $250 for you to be able to do that. So it's definitely a commitment, you know what I mean? But my thing is, like, if I was anybody, I would worry about getting one account and passing it and getting it funded, and then once it's funded, then worry about building your confidence up to get a couple accounts. I've known people to say, man, I'm gonna do what Brandon does, and they put in $1,000 worth of accounts, and then 3 days later they've blown all their money, and then they're like, well, I don't want to do this no more. And it's like, hey, I get it. You know, you can't jump the gun. I mean, you got to be confident in your trading plan and use proper risk management, you know.
Okay, thanks for that, Brandon.
Hey, yes, sir. Anybody else have any other questions? All right, we're gonna rock and roll here. All right, let's pull up a. Let me get a naked chart here. What do I want to use? This my one chart. You can detach this one so I don't ruin my chart. All right, let's what do we got here? All right, so we're gonna go here to the SPY 5-day 5-minute, and I'm going to cut off the alligator, remove the alligator, and I'm just going to keep the floor and ceiling up. Right, I blessed you guys with the floor and ceiling inside Digital Currency Guy Facebook group, and you guys get it. Look my name up, January 6th of this year of 2022. What you do is you take that code, you come up here to setup, and you press open shared item, and you press Control V right there. You press preview, then you press import, and once you import it, I name mine Beast Mode Floor and Ceiling. You can name yours the same exact way, right? Once you do that, now you're going to come here to a naked chart, which we have right here, and you go to studies, and you'll press edit studies, and you'll come down here to whatever you name it as. I name mine Beast Mode Floor Strategy right here. You'll double click this, and if you want the alligator, you can come down here to we got you guys the alligator. What you do to add an indicator is you double click this, then you press apply, okay. Now we got the alligator on our chart, right? So I'm gonna erase this, remove it again. All right, so let's dive in here. So the floor and ceiling, right? I don't know why it's like it's being weird like that. Let me I guess let me remove all these. Edit studies. Let's remove this one because this is I got this on my other chart. I don't want to lose it. All right, there we go. Now our candles are big. All right, so floor and ceiling, right? This is how the floor and ceiling is meant to trade. This is a very simple strategy, but very, very effective. This is what I would say is probably my bread and butter. Does it always win? Absolutely not. But if you use proper risk management, you stay consistent, you're going to reap the reward more days than not. And as a day trader, what more could you ask for, right? So this is pre-market. This is pre-market. This is a US session, right? So the market opens up right here and it trades. This tool will auto-populate these levels. What are these levels? This top level we call the ceiling, right? And I spelled that wrong, but that's all right. The top floor, the top line right here is our ceiling. This bottom line right here is our floor. And this middle line right here is what I just said, the midline. When price is below the midline, you know to get your puts loaded up. And when price is above the midline, you know to get your calls loaded up, right? And all you're doing is you're waiting for price to break either the ceiling or the floor, right? Common question is, well, what exactly are you waiting for? I just said it. If it breaks these levels right here, you have your high range, you have your low range. If we're breaking the floor, which is the low range, it says 378.39. If I see 378.38, which would be right here, I'm taking my put. I'm taking my put. And if we break the high range, 379.85, and it breaks 379.86, I'm taking my calls all right here on a break above these lines right here. Simple as that, right? Now let me clean up my chart a little bit. And this is what I do right here. I will measure the range between the floor and the ceiling, right? This is our ceiling for C. This is our floor for F. And it gives me targets to hold the trades to. So instead of buying my put right here and selling right here, and to me, that doesn't make sense to go risk-free right there if you're going to risk this much for a loss to get this much of a winner, right? So I'll measure this and I'll create the distance between the ceiling and the floor. I'd come up here and get a target, right? And do the downside because I never know which way it's going to break. If I did, I would have 1,000,001 apartment buildings because I would be doubling up all the time. The distance between the ceiling and the floor, I'd come down here and I'd create a target, right? Then I cut this target in half and this is my risk off area. Same up here. This right here would be my risk off area. The only day that I break this rule is Wednesday. Why? Because it's wacky, right? Wednesday for me typically is my worst performing day. My best performing days is Monday, Tuesdays, and Thursdays. Wednesdays, I'm green, but I scale back knowing that that is my weakest day. For some reason, it just consolidates in the morning. And I'm a trend trader, and a breakout and breakdown trader. And it just simply doesn't give us expansion a lot, right? It does. It's a good day, but in the mornings when I trade, it just typically doesn't do that on average, right? So on this example right here, we're going to erase all this, right? And we get our targets. So if you trade one contract or two contracts or 10 contracts, whatever your account is able to trade. The market opens up here, it goes up, comes back down, it closes here. Next candle opens right here, pushes down, comes all the way up, closes right here. Next candle, it opens right here, pushes up, comes all the way back down here, it comes up. Next candle right here at the 9:45 candle, we open up right here. We come up here to our high range and low range. If we break this level right here or this level, I'm taking calls if we break the ceiling. I'm taking puts if we break the floor. That's simple. What happens right here? Put in the chat. Did we break the bottom or did we break the top? Right where I just circled. Make sure you guys are paying attention. Are we taking calls or are we taking puts? Frankie says the bottom. Hey. Erica says the bottom. Yvonne says the bottom. Bradford says the bottom. Hey, you guys aced your test. We're all taking puts. Why? Because we violated this support to the downside. So we take our puts, right? And let me change my color. So the entry is on the floor break right here. The second we break it, I am entering my trade. You may not. I am. I can't tell you what to do with your money, but I can tell you to do. Well, I can tell you what I do with mine. As soon as we violate it, 1 penny underneath, I am taking my trade. Then I'm holding this trade until we get right here to the halfway point. I'm going risk-free into a trail stop. However, sometimes I may go risk-free, maybe right here or right here, even though we did not get to the halfway point, because if we fall down right away, we're going to get IV in our favor, and I'm going risk-free. My goal as a trader is to be consistently profitable, and that's how I do it. I'll put a 1 in the box if you guys are following me still. So we'll walk through it again. And this time, I'm going to move you guys and myself over here, and we're going to go to the next day. All right. Right here. All right, guys. Hey, man, it's the morning. I didn't have my coffee yet. I have no idea what's going to happen, but guess what? We're all elite traders, and we're going to see what happens. First 5-minute bar, market's open. Man, it's so nice sitting back and relaxing. We don't care what happens, right? Second bar comes in. We push up. Guess what? See the midline right here? We're above it. I'm going to get my calls loaded up. Next candle, we are below it right here. I'm going to get my puts loaded up without even knowing what's going to happen, right? I have my puts loaded up because we are below this 5-minute, or I'm sorry, this midline. So if we break the downside right here, I'm probably going, if I measure our move, I'm probably going, here's our target, here's my risk off area. Same thing to the upside. Here's my risk off area. I have no idea what's going to happen, but if something does happen, I'm going to take that trade either way because I know it pays me more times than not. How I determine what contract I'm taking on the stock option side, specifically SPY. We trade SPY every single day. It's a great asset to trade as far as affordability for someone that's newer or someone that has a bigger account. Once you get a bigger account, you can switch over to SPX and trade the same exact thing. So now, if it breaks the puts or the floor, right? I'll put an F for a floor, and up here would be a C for a ceiling. If it breaks the floor, I did not like that, but I'm not an art major, but I'm going to fix it. If it breaks the floor here, if we have a target of right here, it is acceptable to take the 378 puts or the 377 puts. I repeat, if this is my entry to the downside, I want to take a contract that is near my target, 1 strike at my target, or 1 strike like beyond my target. So if we break the ceiling, it is acceptable to take the 380 calls or the 381 calls. Put a DCG in the box if that makes sense with everybody.
I hear you, but I don't understand you.
What'd you say?
I hear what you said,
You understand it. You better put a DCG in the box.
but I don't understand your logic in the strike that you're taking.
What do you mean? You don't understand why I picked the certain ones?
Uh-huh.
Got you. All right, so pay attention. If this is our floor, right, and this is our ceiling, and I'll change the colors up for you. If our target is right here, and our risk off area is right here, and our risk off area is right here, if we're taking a floor break at 378.39, I'm taking for a put, I'm taking something that is down here underneath where the entry's at, right? So I'm taking the 378 puts or the 377 puts. For now, if it breaks the ceiling for calls, I'm taking the 380 calls or I'm taking the 381 calls. Why is that? Because if we break 379.85, I'm taking calls, but I'm going with the 380 strikes because that is above the entry for calls. You follow me?